All right. Hi, guys. Thanks so much for joining us today. I'm really excited about today's presentation. We have a longtime partner now. He's been with us for a while. He's a frequent guest, Zaheer Anwari, and he's going to be showcasing kind of a brand new system we've kind of put together and updated. So I'm really excited about this. I think you guys are going to absolutely love it. Before we get too deep into things, though, I do quickly have to go through our disclaimer. So today's demonstration, it is designed to instruct you on using MetaStock and the accompanying software plugins, and is not a recommendation to buy or sell, but rather guidelines to interpreting and using the specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or information provided in connection with the company. And MetaStock does not endorse the purchase of any security, nor is it paid for the promotion of any security. No information contained in this presentation should be construed as investment advice or a solicitation to buy any security. All right, now that fun part is all out of the way, let's say hello to Zaheer. Zaheer, how are you today?
Hey, I'm good, Bobby.
Oh, yeah, fantastic. Yeah, we're so...
Literally, my doorbell went just as you were introducing me, so I'm good. Can you hear me okay?
Yeah, I can hear you. It seems like your voice is maybe a little far from the mic.
Hello. I had to mess all my my settings up, but I think it's okay now. Can you hear me?
Yep, I can hear you. Yeah, great. So yeah, I know we've been putting a lot of work into kind of help getting some of your strategies and things into the software, and we're really excited to kind of have you on today to show us, kind of some of the trading techniques and strategies that you utilize. And yeah, I just wanted to say thanks again for agreeing to present for us today. And I think with that, I'm going to go ahead and kind of just pass the reins over to you and let you take things from here.
Fantastic, brilliant. Thanks, Bobby.
Yeah. I will be in the background to help out. And do you want me to interject with questions throughout or save them until the end?
I was literally about to say that if you feel any questions are timely, then don't hesitate to jump in. Otherwise, we can always go through them at the end.
Okay, yep, I'll do my best with that. And here, I'll go ahead and make you the presenter.
Fantastic.
All right. I'll get out of your hair, so it's all you. I can see your screen.
Brilliant, thank you. As just want to reiterate what Bobby said. We here at Sublime Trading, we've been working with MetaStock now for a number of years, and prior to actually creating this add-on, we were using MetaStock as our preferred scanner for the obvious reasons that you guys may be familiar with. So it's a real pleasure to have this partnership and this add-on that we've created, which I'm truly excited about presenting to you today. We have called this add-on the Market Edge technology, and today is all about the formula to help you achieve consistent returns in the financial markets. All right, so what we're going to cover today, well, a brief background of the MET and how it came about, myself and my background as well, stocks and performance since 2023. That's the start of 2023 when the bull run really started coming into play. We'll then go through the training today, which is all around the Market Edge technology, and then we'll end up with a Q&A. Now, I just want to set the stage, guys. Now, some of you on here may already have a stock market portfolio in place. Some of you may be new to the stock market world and looking for the right approach. Well, today really will be an interesting day for regardless of where you are on your journey. Ultimately, what people want to do is optimize their performance. Some people are doing well, some people aren't, but there's always the next stage that we can take the portfolio performance to. And so this is precisely what we will be covering today, and how specifically tech has completely changed the game for us as retail investors. It's completely put the control of our financial future and the way we put our portfolio together in our own hands. It's completely leveled the playing field. By the end of this training, you will have an evolved and updated approach to investing in the markets. A lot of the times when I speak to people, even those who've done fairly well, when you dive deeper into the techniques that they're using, some of them are very old school. And so if we can update those techniques and embrace what technology has really sort of created in terms of an environment for us to put a portfolio together, it can really up our performance. So that's the goal for today, to really help you guys evolve and update the approach that you guys may be using. Now, let's go through a common misconception quickly. Often I think when I speak to people, you hear people say that I need to be a genius or an expert or maybe even some kind of city professional to be successful. I want you guys to know, well, I'm going to go through my background in a second, but I've got absolutely no background in terms of working for a hedge fund or an institution of sorts. So this misconception is incorrect. Or you need to come up with a brand new, never seen before strategy in order to get ahead in the markets. This is also incorrect. Both of these things can't be any further from the truth. The tried and tested and safe and simple will make a bigger long-term impact on your financial success and stability. So tried and tested formulas and keeping it simple and safe, they are timeless. And staying true to these techniques is really where the wealth is made. And here's the other thing, right? That may sound boring because you go online and everyone's trying to ultimately get rich quick using short-term techniques, often day trading techniques, because that's where the excitement is, that's where the fun is. So when you tell people that it's about playing the long game, it's about playing true to the tried and tested formulas, techniques of sound investing, the eyes often roll because people think it's boring. But the reality is that there's nothing boring about the wealth you create through compounding gains. I'm going to say that again. There's nothing boring about the wealth you create through compounding gains. Now, the techniques that we may use may not be the most exciting techniques, but when you start seeing the compound growth effect start kicking in and you start seeing the numbers start exponentially growing, that's where the real excitement lies. That's when your eyes start opening up and going, yeah, I like the look of this. I'll give you an example. Yesterday, if you guys were keeping an eye out on the markets, massive reaction to Donald Trump being re-elected, markets reacted positively, all stocks gapped up. And the stocks in my portfolio, a number of them have multiple positions running on those stocks. They all went into significant profits. And as an accumulation, the jump up on my portfolio was unbelievable. So this is why tried and tested, playing the long game, holding, compounding, doing all the right things is really where the wealth is made. Now, let's do a bit of planning, guys. Let's say you have a starting amount of 20K. That's always a good starting amount, $20,000. You want to achieve that cool round number of $1 million. You can add a further $100 to the pot every month. And you've got a 20-year time horizon. What you're looking at is an average annual return of 19.78%, just under 20% a year to be able to achieve these numbers. Now, of course, if you've got a larger pot of money, 40K, 50K, 100K, then of course the annual percentage return will come down. Your time horizon, depending on what sort of outlook you're looking at, that could come down. But as an example, we're looking at around 20% based on these numbers. So if we reverse engineer the goals, the banking system is giving you less than 1%. An S&P 500 tracker is giving you somewhere between 7 to 11% a year. Hedge funds, depending on how good and trustable they are, let's say anywhere from 5% to 15% a year. Real estate, from the sources that I've looked at, generally gets you anywhere from sort of 10 to 11% a year. Wine and whiskey, which I've recently sort of been looking into because I've got a friend who's a whiskey broker, even though I'm not a drinker, but the industry itself is really fascinating, gets you around 13 to 14% a year over the last 15 years. Of course, you got to know what makes a good whiskey, just like you got to know what makes a good stock. But here's the thing, guys, trending stocks, which is what I'm going to be talking about today, will average you over 30% per annum. This is what we have achieved over the last 10 years. We've actually had our track record audited. Last year, we had our hedge fund incorporated in Luxembourg last year. So we've had our track record audited over the last number of years, and we average just over 30% a year. So these aren't pie in the sky numbers. These are actual numbers that we have achieved. And if we put that through a just a sort of comparative return, if you start with 20K and you put it in a tracker fund, or you start with 20K and you do what I'm going to be showing you today over a 20-year horizon, you're adding $100 a month to the pot. And let's say you are getting that 11% a year with a tracker fund, or 30% a year on average investing in individual stocks. If you compare the two, a tracker fund on average after 20 years will get you around $250,000, which in itself is not bad at all. It definitely beats the banking system. But here's the thing, with a little bit of education, with a little bit of resilience and commitment and learning to actually manage in individual stocks, you're going to be rewarded with over $4.5 million. So the numbers are staggeringly different. This is the beauty of going back to what I was saying earlier, of using tried and tested formulas, but adding that element of technology into it to really sort of take advantage of what the current market, the current stock market can afford us. And then, of course, we can then start looking at our goals in terms of what the future holds for us. You know, a lot of people have got one eye on retirement. Maybe their retirement pot isn't as large as they want it to be. This is the way people can catch up with those retirement goals. And then, of course, why not? A lot of us want to have the finer things in life. If we've got this compound effect growth going on in the background, those finer things in life aren't just goals. They actually become a vision of what we can achieve. Some of you may want to obviously upgrade your property, but here's the thing. Here's the most important thing. A lot of you guys may have children. And so, of course, your children are your motivation. Their future is certainly part of your motivation, of your legacy, of what you want to leave behind. I don't have children, but at some point in the future, hopefully I will have kids, and putting them through the right schooling system will certainly be something that will be of interest to me. But here's the thing. What people shouldn't overlook is that the schooling system is good for building careers. It isn't good for financial literacy. It isn't good for investing and managing a portfolio. It doesn't matter what children choose to be as they grow up, whether they're going to become doctors or athletes or artists or whatever career field they choose to get into. Ultimately, we all end up with the same problem, which is, what do we do with our money once we start earning it and saving it and ultimately wanting to invest it? Who's going to teach them? And that's where we come in. So the nurturing of how to be good with money must start with you. And so what we train people to do it here at Sublime Trading is ultimately to turn the term generational wealth into more than just a buzzword. Once you have got on top of how to invest in the stock market and get those returns and grow your portfolio, you're then in a position to pass it down to your children and loved ones, train them in the system and get them to carry on their hard work. There's so many benefits beyond the obvious financial benefits. There's a lot more benefits beyond us. This is bigger than us. So a little bit about myself and how I got on this journey. Well, I've got a degree in software engineering, which is why the idea of technology really sort of interests me. And when I decided that I want to get into investing and understanding how to invest in the stock market, and I started looking into the technology available, came across MetaStock and charting software, it was just a game changer for me, because the idea of studying companies, looking at PE ratios and looking into books, it just wasn't for me. Charts was a real game changer. I worked for Oracle, Larry Ellison's Oracle. If you haven't been paying attention, they recently, well, yesterday, printed a new all-time high. So the company is doing very, very well. I was an engineer at Oracle. I quit because I didn't really enjoy it. I became a TEFL teacher, which is teaching English as a foreign language. Lived in Taiwan, Japan, the Philippines, teaching English. There's no money in it. So I came back to the UK and I got into advertising photography. And advertising photography is really where I started making the money, because our images went on the side of buses and on billboards. We got usage rights. We had big clients like Coca-Cola, Harper's Bazaar, Vogue, Tatler, Barcelona Football Club were our clients. We were doing some excellent work. So that's when the money started coming in. I was saving a lot of it. And I started trend following, which is really it's really where everyone should be gravitating towards when looking to boost your portfolio performance. And I'm going to show you why. But started trend following in 2007. Before that, it was all a bit of day trading. It was a bit of value investing. I was really sort of trying to find my feet. Trend following changed it for me. 2018, set up Sublime Trading, which is the education platform. And then in 2023, our fund went live in Luxembourg last year. As I said, I've spent the last few years building a track record, had that audited. And because we had that audited, we managed to get our hedge fund set up in Luxembourg. So that's the journey, guys. One of the points that I want to get across here is that, as I said earlier, I'm just an everyday individual. I didn't work in the city. I don't have a degree in economics or finance. I basically learned all of this through just sheer hard work and determination. And because I've done all the hard work, I'm now in a position to get you guys moving forward in a much more seamless way. My goal was to put trend following back in the limelight, because what I understood in my early days, 2005, 6, 7, that it had become a forgotten art. Lesser strategies were taking center stage. And when I looked at performance tables, people like Richard Dennis, who's a trend follower, is at the top of performance tables, but Warren Buffett, who's a value investor, is mid-table. Yet you go online and all we ever see are images of Warren Buffett, yet we hardly ever hear anything about Richard Dennis. And so that was my goal. And through my journey, I've been blessed to be able to contribute to a number of wonderful publications. Of course, I've got this amazing partnership now going with MetaStock, but I've also written or done webinars or done live presentations for all of these other publications who have given me a platform to be able to spread my message, which is you guys have to look at trend following as a serious approach to wealth creation. Guys, if you haven't read it, Way of the Turtle by Curtis Faith, this was the book that changed it for me. I read this book in 2005, 2006, and it made complete sense. This is what I was looking for. It was a real moment of clarity. And what I took away from this book was that anyone with a rules-based system could be successful. Simplicity is key. Charts tell you everything you need to know. The less you do, the more you make. And a breakout strategy is powerful. And this is where market edge technology comes in. We've taken old school techniques, old school breakout techniques. We've added that layer of technology that was needed. We've optimized the strategy for modern market conditions. And that is where the market edge technology comes in. Breakouts are unbelievably successful. They have a track record going back decades in terms of compounding, entering and compounding winning stocks. Okay, so 2022 was the start of the bull run. 2023 is when we started entering positions. Sorry, there's a closed bracket without an open bracket there. There's a typo there, so please excuse that. So what I'm going to go through are just some stocks found using the MET, the market edge technology. First up, Ameriprise Financial. This has moved up 103% since the bull run started. Next is Amphenol. This has moved up 105%. These are all US stocks, by the way, guys. Next up is Fiserv. This has moved up 110% since the bull run started. Then you've got FTAI Aviation. This has moved up 950%. This has been an unbelievable stock in the last couple of years. You've got GoDaddy, where we all go to potentially purchase domain names. It's a stock that's getting no media attention. Everyone's probably heard of GoDaddy for whatever reason, but no one ever considers the stock. And this is the beauty of becoming an investor, and the beauty of knowing how to scan for stocks and look for stocks, because when you go online or when you go shopping, the experience becomes completely different. I no longer walk through a shopping mall just as a consumer. I look around, I see the brands around me, and I think, right, I've invested in that. Lululemon, for example, a stock I've invested in previously. Skechers, Apple, of course, Microsoft, all of these brands that we are aware of that people just spend money on, but they never consider actually investing in their stock. Having a rules-based system that finds these stocks for you completely changes the game. GoDaddy, it's up 160%, also now breaking out and printing new all-time highs. Vistra Corporation. This is the top performing stock. A little fact for you guys. This is the top performing stock this year in the S&P 500. It's outperformed Nvidia. Yet how many people have heard of Vistra? How many people are aware of the stock? It's moved up 560% since last year. Also using the MET, I've invested in gold. So I'm currently long on gold. I've been long since March when the trend started. I was short on palladium. I exited my positions a few weeks back in this sort of mini rally that's appeared. And then I was also long on many of the yen pairs before the correction came in. And they've all been used, they've all been invested in using this same systematic approach. So here's the thing, guys. It's important to diversify the portfolio with trending assets from other classes. But don't diversify for the sake of diversification. Often you will hear people say, oh, you have to diversify. No. Why would you diversify into an asset class that isn't performing? Looking at US stocks alone, you've got enough opportunity to diversify simply by diversifying across sectors. And I'm going to show you that in a second. Now, here's how the portfolio has performed since we started investing in stocks at the beginning of last year. We have a service called the APL, the Asset Position Log. And in short, the Asset Position Log allows you to mimic our portfolio. We share the stocks, we share the entries, the stop losses, the compound levels, how we're managing those stocks. When we exit, community members exit. When we hold, compound. When we let them run, our community members are doing the same thing. This is based on a $20,000 account. The reason it's $20,000 is because that's the very minimum that we recommend people start with. So the copy service is based on a $20,000 account. Of course, some people start with more. All they need to do is adjust the risk. So when we risk 1% on 20K, those who have, say, 100K, they will adjust their 1% risk for a 100K account. Yet the entry points, the stop losses, all the other price levels, they remain the same. At the beginning of February, when we started taking our positions till today, we have had a growth of 118% on the running positions. And these positions, a lot of these positions are still open, and they're likely to continue growing as we move through the rest of 2024. Remember, guys, typically at this time of the year, seasonally speaking, we have a rally, which some people refer to as the Santa Claus rally. So these positions are likely to continue growing. Here's just it needs a bit of an update because we added more positions into the portfolio last night, so it's a little bit off, but it's 99% accurate, just to give you an idea of how we have diversified across sectors. The main sector that has performed exceptionally well in the last sort of 18 to 24 months is industrials. Yet, if you go online, all you ever hear about is big tech. What Nvidia is doing, what Microsoft is doing, what Apple, Tesla, all you ever hear about is big tech. Yet there's 10 other sectors out there. And the best performing sector has actually been the industrial sector. Amphenol, for example, Fiserv, two of the stocks that I shared with you earlier, those are industrial stocks. So where does it all start from? It all starts from being able to understand how to go into the sectors, scan the sectors, find the strongest sectors, and then find the strongest stocks in the strongest sectors. That is how you build a portfolio, because then you're consistently adding the best stocks into your portfolio. And typically we hold for around 12 to 18 months. So use the MET to invest in trending stocks that are outperforming the S&P 500. What does this mean? Well, the S&P 500 is an average. Some stocks match the average, some stocks underperform, but many stocks outperform the average. These are the stocks that the MET has been designed to find and filter out for you to then add into your portfolio. So just going back to those examples that I've shared, the S&P 500 has climbed 70% since October 2022. If you look at all the stocks that I've shared, they've all moved higher than that. So Ameriprise 103%, Amphenol 105%, Fiserv 110%, FTAI 950, GoDaddy 160, Vistra 560%. All of these stocks have moved up further and quicker than the S&P 500. So these stocks are outperforming the index. Why do we do that? Because they move up quicker. And because they move up quicker, they deliver superior returns over 12 to 18 plus months. And as I said, typically we hold for 12 to 18 months, often longer. If the stock keeps on moving, you do not want keep on moving in your favor. You do not want to sell. You want to hold and you want to compound. Again, going back to the very beginning, this may sound boring, but it's not. It may sound boring, but the wealth is created in doing the tried and tested techniques again and again and again and again. And this was one of the questions that in my early days I had to find an answer to, which is, why is trend following just sort of forgotten about? Why is it getting buried? And the answer is because it's powerful. Something that is this powerful has been buried under lesser techniques for the obvious reasons that it is so empowering once you understand how to execute this on a regular basis and around your lifestyle. So you don't have to give up anything. You can still work, you can still do all the things that you enjoy, spend time with your family, go to the gym, have a lifestyle. All we're doing here is setting these really smart processes in the background that take a few minutes a day to manage, so that you've got all your wealth creation principles happening in the background while you're still getting on with life. So stocks found by the MET all follow a particular pattern, which we call the 4PS method. Now, over the years, there have been various ways of counting waves in the market. You've got Elliott waves, for example. You've got Gann, for example. You've got tools like Fibonacci, for example. I personally believe that all of those techniques, they had their time. We've evolved from those methods. We've got better, we've got smarter, we've adopted technology, we've got tools like MetaStock that have moved us away from those techniques, which were great for their time. They were pioneering for their time, but we've moved away and we've created updated techniques. So what is the 4-phase method? They all follow a particular method called the 4PS method, which is the 4-phase sequence method. All stocks that we invest in follow 4 phases, 4 very clear phases: phase 1, phase 2, phase 3, and then phase 4. Phase 1, we're looking at stocks with a proven performance. If a stock has performed well in the past, it's very likely to perform well in the future. We're then looking for a stock that's going through a sideways market. You know the expression, the longer the consolidation, the bigger the breakout. Typically, I want stocks that have gone sideways for at least 3 to 6 months. That's a good base. Then we have the breakout. When a stock breaks out, see there, that what I said at the beginning, that breakouts are powerful. That's the first sign of a trend, is a breakout. What we're looking for is a breakout from a sideways market. And then we've got phase 4. Phase 4 is the new trend, which typically lasts 12 to 18 months. And throughout that trend, as it develops, you will have numerous breakouts. Of course, you'll have pullbacks. But here's the thing. Not all pullbacks are good pullbacks. During a trend, you will have far more quality, high probability breakout entries than you will pullback entries. And so if you can get on top of those pullback entries and then have multiple stocks in the portfolio, all with the same strategy being held and compounded in a very simple and straightforward way, that is how you then maximize periods of trend in the market. And I've already shown you how we've done that, turning a 20K account to over 40K by simply taking a few stocks, holding and compounding it since the beginning of last year. So, excuse me. So how do we do this? Well, to show you how to do this, we are going to move across to MetaStock. So bear with me. Okay, let me just close this for a second. There we go. Okay, so when you first open MetaStock, for those of you guys who already have MetaStock, you'll be familiar with this. For the newbies on here who are looking to get involved, MetaStock have some excellent trial options and starting options, which I'm sure Bobby and the sales team will go through with you. So I'm just going to give you an overview of how it works. So when you first open it, you take your mouse and you go into the top left corner, and you see there's a button there that says P, open the Power Console. So I'm going to click on that. When you click on that, you're then met with this interface. There's a number of options here on the left-hand side. We're not going to go through everything. We're just going to go through the main features for now. So the first feature we're going to look at is Explore. Explore, let me just move this up. Okay. Explore is the scanning features within MetaStock. And within the MET, you will get 4 key explorers. You've got Breakout Explorer for stocks with volume over 200K. You've got explorers, so these are long explorers rather, for over 200K and over 50K. And you've got short setups for volume over 200K and short setups for volume under over 50K. The ones with over 200K, those are for large cap markets. So you're looking at the US markets and any other large cap markets. For the 50K explorers, you're looking at the smaller to medium cap market. So the UK market, and also we have a growing community in India. So the 50K explorers are good for the Indian stock market. So if there's anyone here based in India or is interested in the Indian stock market because it has been performing phenomenally since last year, then we have you covered with the MET as well, because it is market neutral. Whichever market you're looking at, the MET has the settings for you. Then of course we have the markets that MetaStock give you access to. The three main markets that we like to look at is the Asia markets. So if I click on there, and we've got the National Stock Exchange of India, you can see that it scans almost 3,000 stocks for you. Phenomenal the amount of stocks, good stocks they are at the moment in the Indian stock market. Then Europe, Middle East and Africa, that's for the UK. The UK market is in that category, but this is the one that I really want to focus on here, which is North America. In North America, you've got the NASDAQ, you've got the New York Stock Exchange, and you've got the Amex. Together, you're looking at 12,000 stocks. So you can imagine like a day like yesterday when we had such a big move and a gap up and strong moves in the market, MetaStock really came into its own. And what I mean by that is, now if I go to the chart section, once you've selected your scanner and you've selected your market, you click on Start Exploration. Let me just, for example here, click on 200K. You can see there in the bottom corner, it says Start Exploration. Click away. Give MetaStock the time it needs. Usually it's around 10 minutes to scan through all of those. By the end of it, if I give you an example, yesterday I had to go through 748 stocks. That is how many stocks that MetaStock and the MET together found for me to go through, which is phenomenal. The more the better, because I can then go through that list and find the best stocks. Now 748 is very much on the excessive side, simply because of the moves of yesterday. Typically it's anywhere from sort of about 100 to 200 stocks. So it's a much more manageable list. And once you know what to look for, you can go through a list of 100, 200 stocks literally in about half an hour to an hour. So if you do your planning at the weekend and you do your scanning at the weekend, you have plenty of time to run the scans and to find the stocks that you want to make into your portfolio. I like to do the scanning every single day because markets close at the end of each day, and at the end of each day, new stocks are coming up. And if it's not new stocks, it's compounding opportunities. So I like to run my scans daily, but at the very least, you want to be doing it once a week and at the weekend. Okay, so once you have done that, you then choose a stock. So I'm just going to pick the first one. It's not the one that I actually want to go through. I'm going to go through a few other stocks, but I'm just going to show you what it looks like. Once you pick a stock and you choose your template. Sorry, let me just do that again because I missed a little step. Sorry guys, bear with me. Okay, once you choose a stock, you then go to apply templates, and you can see there it says MET 4-screen breakout strategy. So that is the template that you will get with the MET add-on. Then we say open chart, and when it opens up, you will be presented with a very beautiful looking, let's give it a second guys, apologies, here we go. Yeah, right. You will be presented with a wonderful 4-screen setup where you have the monthly time frame in the top left, weekly time frame in the top right, and then you've got 2 daily charts, bottom left and bottom right. I'm just going to change to the SPY because I want to start on that for you guys. And I'm going to give you a quick overview of how it works. There are a bunch of indicators within the MET, within this 4-screen setup, which ultimately tells us multi-time frame alignment. Multi-time frame alignment. It's just basically a flashy term to say that the monthly, the weekly, and the daily time frame are all moving in the same direction. When they're all moving in the same direction, we have what is called a high probability asset. Now, when they are all moving in the same direction, excuse me, I can't see, it looks like my, all right, there we go. When it is moving in this, when an asset is moving in the right direction, we then have in the bottom right corner, the daily time frame, we then have blue bars. So you can see, even though the bull trend started in, let me just go back further, bear with me 1 second. The bull trend started here. This is October 2022. The time frames really started aligning. Now, there's not to say that this is when we entered. We entered earlier on reduced risk, but when the time frames really started aligning at the beginning of this year, it was January 2024. And you can see that since January 2024, predominantly the bars have been blue, telling us that we are in a strong bull market. Now, of course, there are times where there are corrections in the market. So April, there was a correction. That's because the S&P broke through the 5,000 round number, came back to retest it, then it bounced, and then we had another correction in July and August. Now, here's the other thing about the beauty of using a systematic approach. If you went online during July and August, everyone was claiming that the market was coming to an end, right? The stock market was crashing. And that's because the stock market was declining. Now, why was it declining? Because big tech had a very difficult earnings window. Microsoft, Tesla, Nvidia, Apple, Meta, they all declined. Amazon declined. They had a very difficult earnings window, and their weighting on the indices is large. They're heavy weighted stocks. So if anything happens to those heavy weighted stocks, the indices go with them. But if you looked at the lower weighted stocks, Walmart, Coca-Cola, for example, they all continued moving up and creating new all-time highs. So the beauty of having a systematic approach like this and having explorers is that even though the indices were declining, MetaStock was still picking out good stocks. And that then gave us a better overview of what is actually happening. Okay, stocks are still moving up. It's just the heavier weighted stocks are moving down. Fine. That means you just need to keep holding, compounding, following the process. Fast forward to today, what's happened? S&P, NASDAQ, Dow Jones, all have recovered, all setting record highs, and all likely to continue pushing to new highs through the rest of this year. So this is what we have. We have a bunch of indicators on the monthly, a bunch on the weekly, a bunch on the daily, and when they all align, you then have the blue bars on the daily in the bottom right telling you that this is a high probability stock that you want to get into. In addition to that, we've got some wonderful features built into MetaStock. First of all, you'll notice there's a ribbon here that says bullish on the monthly. Oh, excuse me. It says bullish on the monthly. It says bullish on the weekly, and it says bullish on the daily. So it's telling you when all the indicators align, it's telling you that the 3 time frames are bullish and aligned. In addition to that, if you go to view and click on expert commentary, within MetaStock, you've got commentary that's updated bar by bar. It will tell you the exact parameters of what is happening on each bar, what the indicators are doing, and then when the signals are produced, it will give you the entry points, the stop losses, the compound levels, all in the commentary. Another point to note, guys, is that this isn't a black box system. The indicators aren't hidden. The indicators are all clearly explained within the system and within this wonderfully detailed manual that William, who's part of the MetaStock team, has put together. So there's complete transparency. We do not create black box systems. What we do is we train people to create portfolios. Going back to what I said earlier, is what we want is to turn generational wealth into more than a buzzword. We want it to be something that is actually tangible and something that people can aim towards. And that is growing a portfolio, growing wealth, having a systematic approach, then getting to a point where you sit your children down and go, listen, you need to learn to do this because your time is coming. Give them the system and they continue to do the hard work that you have put into place. So that's all in the system. Monthly, weekly, and daily bottom right, once they are aligned, the daily in the bottom left comes into play. Now, there's a feature in the bottom left that I have to cover with you now, which are these green dots. See those, the green diamonds. You've got the green dots. The green dots are low probability. So what it's saying is that you can still enter, going back to what I said earlier, which is we still entered when the bars weren't blue. We just reduced our risk. So where the green circles were in play, you can still enter, but you may risk 0.5% per position or 1% per position. Where the diamonds come in, these are high probability entry points. This is where the market is fully in your favor. The odds are very much in your favor because the market is aligned, the timeframes are aligned. And this is where you can then start increasing your risk. So instead of having 1% per position, you got 2% per position. Notice, guys, remember at the very beginning, I said breakouts are powerful. Notice how many breakout entries there are along this trend. All of these diamonds, all of these circles, these are breakout entry points. So let's say you've got something like 20 breakout entry points. You will only have 2 potential pullback entries, which is one pullback here and a second one here. Of course, we're looking in hindsight, so it's easier to recognize pullback opportunities. In real time, breakouts are so much easier to recognize. So imagine if you entered on this first breakout, this first diamond, and then you strategically bought in on these additional diamonds. You can imagine how much you would be milking a trend for. Then we've got other indicators here at the bottom. For example, this is called the breakout qualifier. It actually qualifies how good the breakout is. So if it's a green histogram bar, it's telling you, right, this is an excellent breakout. You want to enter in on this breakout. If it's a red histogram, that means it's a bad bullish breakout, but it may be a good bearish breakout if you're in a bearish trend. Of course, we're in a bullish trend here. So red histogram means a bad or a low probability bullish breakout. And then gray are neutral breakouts. So we've got tools that are actually qualifying the breakout entry for you so that you are literally filtering out only the best entry points to get into. Okay, let's have a look at some of the stocks that I have recently picked up from using the MET. And here's a stock that I am sure you may not have heard of. I certainly had not heard of this stock until it came on my radar. And that's basically, guys, I'm here in the UK. I'm not familiar with every US company out there. But when I do find these stocks and I think, God, what is this company? Because this stock is amazing. So if you look at VRT, which is Vertiv Holdings, I mean, you cannot argue with their stock performance. Their stock performance from July 2022 was around $8. Fast forward to today, it's $122. That's a massive increase, and it plays out exactly how I said. There's your phase 1, which is your proven performance history. Phase 2 is this sideways market. Phase 3 is the breakout, and it's now right at the base of phase 4. So this is a stock that we have added into the portfolio today. So I've given you a new stock, guys, that you want to go away, do your own analysis on, and one that I have added into the portfolio. If we go to the weekly time frame, you can see the trend filter is green. It's above the 50 and the 200 simple moving averages. It's above all the key levels of support and resistance. All the indicators are telling us that the trend is in play because we have the green bars, and also we have the ribbon at the bottom telling us that we are now at the start of a bullish phase. So we've got bullish on the monthly, we've got bullish on the weekly, and then if we come down to the daily time frame, same setup. You can see how we're above all the moving averages. The trend filter is green. We've got a bullish ribbon here telling us that the bull trend is very much in play. So we have that alignment. It's at the start of the trend. It's broken out from consolidation. It's a stock with a proven history. There is no reason not to take this stock and put it in your portfolio. And if we go to the daily in the bottom right, you can see where the bars are all blue, telling us that we do have alignment in play. And then we have the entry point, the stop loss, and we have the compound level here. All of these levels, again, are explained. If you go into view and if you go into expert commentary, everything is explained in the expert commentary. The blue bar indicates that BRT's daily, weekly, and monthly charts are aligned and bullish for 3 bars since 5th of November 2024. As you scroll down, it will tell you everything that you need to know in terms of the parameters, the entry points, stop losses, what you need to put in your broker account, your risk management is all explained there. Now, also, if I just compress the chart, another feature on here, guys, you will notice is this red line underneath the chart, and that is the trailing stop loss. So the exit management is also there on the chart. One of the hardest aspects of investing is knowing when to let go of a stock. So you want to remove that emotional element. Often what tends to happen is that people hold on to losing stocks and then exit from winning stocks. It's all very emotionally based. What you want is to reverse that process. You want to cut out of losers with a small loss, and you want to hold and you want to compound your winners. And the MET is designed to help you do that. So let's say if you did enter, as an example, let's say you did enter at the very beginning of this trend, which was back in May 2023, started entering on these diamonds and compounding, you will then have exited in July of 2024. So you would have held that stock for 15 months. And going back to what I said, typically 12 to 18 months is our holding period. Here is a perfect example. And the fact that it's done that in the past, and it's now setting up to repeat that in the future, this is very much a stock that you want to be monitoring, and at the very least, you want to be taking a small position on. Okay, I'm just conscious of time, so it's just an overview. I'll just quickly go through one other stock. So one other stock we will go through is AYI. Again, maybe a stock that you may not be familiar with. Let me see, it's not coming up here. Here we go. That's not chosen. AYI. Yeah.
Hey, Zaheer.
Yes, sir.
Yeah, while you're showing this stock, we also had a good question come in. Someone would like to know if you could summarize what protections MET offers when things don't go the way that the user wants, and how does it help to manage risk?
Yeah, great question. The answer is basically stop losses and trailing stop losses. That is as simple as it needs to be. Every position you take, first of all, everything should be done in order. First and foremost, you have to make sure that the asset is a high probability asset. That's where the scanning and the 4PS method comes in. If a stock doesn't meet that, put it aside because the odds aren't in your favor. Step one, stack the odds in your favor by choosing a high probability stock, but we're still playing on probabilities. So what's the next step? Risk small. Do not risk more than 1 to 2% of your account size on any one position. Okay, now because you've risked a small amount, you're not emotionally attached. If it fails, it fails. How does it fail? Have a stop loss and have a wide stop loss. So our stop loss is based on the volatility. We use ATR and we multiply it. So we've got a nice wide stop loss. So it doesn't get stopped out on any sort of normal volatility or pullback in the trend. But if it does get stopped out, because it's wide, the trend has clearly failed. So that's your next protection. And then the final protection, which I just went through, is the trailing stop loss. As the stock moves up, you're following it with a trailing stop loss. So you're locking in small bits of profit. You're eliminating risk as it moves up. And then you start locking in small bits of profit. So there's complete protection at every step of the way. Okay, I hope that answered the question. So this is AYI. Just to quickly go through this, you can see the setup is very similar to Vistra, the stock that I just went through. Proven performance history from 2012 to 2016. So that's a 4-year performance. It then went through this massive consolidation. So from 2016 to this month, it went through an 8-year consolidation. The longer the consolidation, the bigger the breakout. We know that it trended for 4 years previously, so the breakout could be equally long. We have the setup going on here. The 4PS method is coming into its own on the monthly time frame. Going to the weekly time frame, you can see that the ribbon here at the bottom says bullish, so the indicators are aligned and telling you that the trend has started. And then on the daily in the bottom right, again, you can see that the ribbon here is bullish. The trend is heading up. Everything is looking good. And so this is another stock that has been recently added into our portfolio at the very start of the next uptrend. What are the parameters that we've used? Well, we have the entry point, we have the stop loss, and we have our compound levels. And then as the trend develops, the trailing stop loss, which you can see here, that will start coming into play as the trend starts moving up. So as it starts moving up in our favor, expect the trailing stop loss to follow. And note, guys, as I said, very far away from price action. One of the mistakes that a lot of people make is using stop losses that are too tight because they want to leverage their gains. But people soon find out that leverage not only works for you, but it works against you. So if you're over risking and using tight stop losses, at some point, you're going to get into trouble, and people find that out sooner rather than later. So there you have it, guys. That is the MET in a nutshell. If I quickly go back to the setup here, use the explorers to find the stocks, to get the explorers to scan the market and find the stocks for you based on volume. Large cap, medium cap, and small cap markets all taken care of with the explorers that we've created. You've then got a plethora of markets to scan, which MetaStock provide for you. Our main markets are the Indian market, the London market, and the US market. But of course, if you're in, let's say, Germany, you can scan for the German market if you wanted. And then once it's done the scan, you go into the chart section, you save the scan. I like to call it whatever the market is with the date. So US 6th of November, UK 6th of November, and then it tells you how many stocks have been discovered. You then open up the stocks using the four screen method, and you then analyze the stocks. You find the best ones, you put them to one side, and then you invest in those in your portfolio. I have a 2-tier watch list system. Tier A are the stocks that make it into my portfolio. Tier B are ones that I'm watching. They don't necessarily make it into my portfolio. Stocks sometimes get upgraded, sometimes they get downgraded. That's how I then manage my watch list and then ultimately manage the portfolio. And as I've shown you already, the stocks that have been found using this system have returned us almost 120% since last year. We've really taken advantage of what the stock market has had to offer. Okay, so in summary, guys, the MET 3-step blueprint, pinpoint when to invest for maximum ROI. So that's market conditions using the S&P 500. If the S&P 500 is bullish and the bars are blue on the S&P 500, that means we have a bull market in play. Step 2, identify top assets to invest in for maximum ROI. So this is where the explorers come in and where the 4-screen setup and the analysis comes in. And then finally, clarity on how to invest for maximum ROI. The strategy is all inbuilt for you. The daily time frame in the bottom right that has the entry points, the stop losses, the trailing stop losses, that's all inbuilt for you. All you've got to do is go through the manual, learn how to use it, and start running away with it. Guys, I've figured this all out for you. I've spent years and years figuring this out. I started my own journey in 2007. It's taken me 16 years to get my hedge fund. That's the kind of journey I have been on. It's now available to you through MetaStock. So, give it a chance. So this is your edge. There's an expression in trading, which is if you cannot define your edge, you don't have one. And if you don't have an edge, you will get eaten by someone who does. You've got to be able to define your edge. And an edge isn't, when I ask people what's your edge, they'll say things like my risk management or my psychology. That isn't your edge because that doesn't identify high probability assets. Your edge is being able to identify what makes a good stock. The 4PS method and the inbuilt indicators in the MET, that is your edge. So 1, use the explorers to scan for the best performing stocks from the strongest sectors. Use the 4-screen setup, so that's the tools, the expert advisors, and the commentary to shortlist the very best stocks into tier A and tier B, create a risk management framework, typically no more than 2% per position, use the daily in the bottom right to place positions in your broker account, because that's where you find the entry points and the stop losses and the trailing stop losses. That's all there for you. And then place a set of positions, let's say 10 stocks, cut out the losers with a small loss, strategically hold and compound the winners only. So when the diamonds keep appearing, look at that breakout qualifier tool. If it's a good breakout qualifier, you can then enter more or buy more of the stock. Use the trailing stop loss in the daily bottom right to manage your positions, and then take profit and rebalance every 12 to 18 months. That's typically when the trailing stop losses start getting hit, because the market is going through a correction or a breather after a massive rally. And then repeat that process for life. And then, as I said, train your loved ones to carry on your good work. This is your legacy. Someone has to do this, because as I keep on saying, guys, the schooling system isn't going to do it. I've got a nephew and 2 nieces. My nephew and niece are 15 and 11. And I've asked them already, have they talked to you about money at all, about saving? Nothing at all. They've done nothing at their ages. And for me, I think that's pretty shocking, because that's the perfect time to start instilling these sort of processes of understanding how to be good with money in children. Okay, so what does it include? Well, there's a whole bunch of things there, including a detailed manual explaining everything. And here's the beauty, guys: support structure from Sublime Trading and MetaStock. MetaStock have an absolutely brilliant support structure, and we back that up as well with our own support structure. It is 1497 one-off price, but pre-release, because I believe the MET will be ready to go either today or tomorrow. Bobby can confirm. We have a pre-release price of 997, one-time offer. Included in that will be a one-to-one onboarding call with myself, so that we can discuss your current portfolio, and you will also get access to a private community to discuss daily setups. All of this will be included in that price of 997. And again, as we've already mentioned, guys, it will help you get back on track with all your goals. I'm sure these are all, you guys are already on track, but this will help you boost your performance towards getting back on towards those goals that you have, particularly the most important one there, guys, which is creating that generational wealth. Now, here's the other thing, guys. What else does the MET do? And I think these are the things that tend to get overlooked when you buy an add-on like the MET. There's 30+ years of combined experience between myself and the co-founders. That's the amount of time and love and attention and money that's gone into creating it. It will save you thousands and thousands and thousands of dollars trying to create this system yourself. And I mean tens of thousands, because you've got to test, you've got to find software, you've got to create the tools. It's a big process. We've done the hard work. It will save you endless hours creating the strategy yourself. At the very beginning, I said you don't need to create a new system. That's not your priority. Your priority is wealth generation, it's wealth creation. So we've done the hard work. You don't need to create the system. You just need to learn to use it and run away with it. It's a proven system. We've had our track record audited, and our hedge fund went live in Luxembourg last year. For a lot of people, it will give them the peace of mind that they're looking for, because a lot of people don't have that peace of mind. They're struggling when it comes to investing and getting any sort of consistency. This will bring that peace of mind that you're looking for. And finally, as already mentioned, it's a system that you can pass on to your loved ones. And it's something I'm extremely passionate about, that we have to take that responsibility to learn this and then pass it on to our kids, because the schooling system isn't going to do it. As I said, 1497 is the actual price, but we have a pre-release price of 997, one-time offer, as well as the onboarding with myself and the private community where we can discuss all of those setups. So a day like yesterday, when there were 800 setups, the community comes in very, very useful. Over to you, Bobby.
Fantastic, Zaheer. Great job. Always like kind of following along and seeing your take on everything and how you can, find and follow these trends so well. One thing I do want to say, so we are giving you guys this pre-release special where you save $500. However, just a few minutes ago, I had confirmation that it is available now. So we will still give you this rate for the $500 off, but it's actually available right now. And I do have, I guess, a slide of where you guys can actually go to order that. So let me go ahead and present here for you. All right, so, all right, back into here. So Zaheer covered this already, but I like to just touch on it again. I mean, we do have a fantastic support team here, so we can not only help you guys set up MetaStock, but also the Market Edge technology trading system. We can even help install everything for you, and we offer free unlimited support for MAT. So we just got the product page live. We've been working on this for months now, and during the presentation here, we're able to actually get everything released. So it is available right now. You can come into our chat room, metastock.com/sales chat, and mention the promo code Sublime, or just tell them about the webinar that we're doing now. Or we do have a landing page, metastock.com/Sublime MET. And I will say too, there really is a ton of value here behind the community that Zaheer offers. As he mentioned, they're in there every single day. They're posting and talking about all the major trend following systems and what they're creating their own ranked tier list, and you'll have access to that from them, as well as access to being able to identify those on your own inside of MetaStock. It's an absolutely fantastic deal here, and a really well put together strategy. So I highly recommend taking advantage of this, especially while we have it on sale right now for this kind of pre-release, even though it is officially live as of a few minutes ago. And also I want to say, yeah, Zaheer and his whole team has always been fantastic with support and questions, anything like that. So even if it's months from now, you have some specific questions or something and you want to reach out to them directly, you can do that. And then of course we have our entire team here too, at any point in time, ready and available to help you. So I highly recommend trying this out. And if you have other questions about it, or if you need MetaStock, if you don't have the MetaStock software yet, come into our chat room, metastock.com/sales chat, and we can get you set up with like a free trial of MetaStock so that you have access to our charting software and the scanner and everything. And you can have that to go along with MET if you guys were to order that. And again, yeah, we do have this page live right now for you guys, so you don't actually have to wait to order. And I think that kind of sums things up. I think you did a great job, Zaheer, going through it. If there's anything else you need from me, I'm here to help, but I think you covered everything really well.
Bobby, it's been a pleasure. It's been a lot of, as you said, a lot of hard work getting it all together, but I mean, it's looking fantastic. So I'm really excited to get people using it and you know, get people trained up on it and getting them making some good decisions. So guys, give it a chance.
Great. Well, thanks again, Zaheer. Also, I do want to mention to everyone, starting next week on Monday, we do have a week-long conference going on, and Zaheer is actually going to be presenting during our conference next week too, along with like 40 other speakers. And if you're interested in registering for that, it is a free event. I mean, if you're watching on YouTube, you can just come back onto our YouTube channel, but I recommend going to our events page and registering at metastock.com/events. I believe we'll get you right there, and you can register for the upcoming conference, and you can also see Zaheer present during that as well. It looks like we do have a link. It's metastock.com/traders-conference will allow you to register for that. So we recommend checking that out too. But thanks again, everyone, for joining us today. And feel free, we're still have people available throughout the rest of the day here in chat if you want to come in and ask us other questions or anything like that. But I think that's it for now. Have a great day, everyone.
Cheers. Thank you, Bobby. Bye.
Yep.